Rise business analyst, Chika Mbonu, breaks down the numbers. Good to have you with us. Now, how has AFREXIM Bank different from others? What does these figures actually tell you?
Okay, AFREXIM Bank is a Pan-African multilateral financial institution, set up in 1993 to finance and promote intra and extra African trade. With headquarters in Cairo, Egypt. Currently about 50 African countries belong to it, and it has a capital of about 55 billion, trust capital of 5 billion. It was set up to provide services in 3 core areas. One is basically credit, basically trade finance services and project finance services. The other one is also risk bearing, providing guarantees and credit insurance to African corporates, and of course trade information and advisory services to African corporates. So that's basically why the main focus of AFREXIM Bank. All right. Yeah.
Very good. Now, what is responsible for the improved performance? We have $288.5 million and a 24% growth rate compared to the previous year.
Yeah. A 24% growth in comprehensive income is laudable. It's commendable. And I would just
very good.
Take a deep dive and look at the figures.
All right.
Basically, I anchor it on two levels. The first growth was on net interest income, which grew by 20%.
Yeah.
The net interest income grew by 20%. And that growth is anchored on two planks.
All right. One
was the growth in loan volumes.
Okay.
The other one is the growth in interest rate, the LIBOR. The loan volumes during the year grew by 31%. So that led to the growth in loan volumes, and that led to the growth in interest income. In addition, also during the year, the LIBOR rates, increased, and they got a little headroom when they took off their interest expense, as they passed on more to the customers. So loan volumes grew, which led to growth in the net interest income. LIBOR rate grew, also increased, which led to growth in, The other level of income that grew is also the net fees and commission line. Net fees and commission line. Net fees and commission line grew by a whopping 139%. Basically, it was a strategic focus by the bank during the year to focus on advisory services and capital market activities for several African countries who are pushing new developments in trade and expansion of the trade policies.
Okay.
So that led, that service was required by the lot of African countries. And so that's what led to the 139% growth in fees and advisory services. So the other element there was operating expenses. Okay. Operating expenses grew by 32%. Grew by 32%. But if you look at it, what happened during the year was that they increased their professional staff recruitment. Okay. Because of the growth in their volumes. Right. You can see that led to the expansion in their business. Okay. But that's also because staff emoluments grew by 21%.
Definitely.
That. And then admin costs also increased because of the several strategic initiatives they are employing in Africa. Right. One area that I need to look at is the impairment, loan loss. The impairment costs actually increased. But what happened was that they had a one-time application of IFRS 9, which we have been talking about in this program. Right. Basically, the way they recognize the loan loss. So in 2018, that was the first time that the AFREXIM Bank implemented it, and that affected their net interest income too. Now, another thing they did also was the deliberate strategy during the year to expand their liability base in Africa, to chase African-based liabilities and deposits. That also helped them a lot in growing their deposit base. And they also had a deliberate equity mobilization activities during the year. And they raised about almost more than $400 million during the year on equity to reduce their cost of funds. Now, on the ratio levels also, good results. The return on assets increased from about to 2.18% from 1.87% on the previous year. Right. Return on equity was flat. Cost to income ratio was good, despite the things I talked about already. New recruitment, admin expenses growing, they present. Okay. And then NPA ratio that I talked about was marginally increased to 2.95%, as I mentioned earlier, because of the implementation of the IFRS 9 for the first time. It led to the writing down a lot of loans, and then the earning power on those loans also reduced. Capital adequacy ratio, very good. at 25%, comparable to other financial institutions. So overall, what I have for them is the earnings, strong earnings growth during the year, higher profitability during the year, strong growth in business volumes, and then strong capital adequacy ratio and liquidity and asset quality. So overall, I believe that AFREXIM had a good year.
Very good. Now, assets also grew by 13% to $13.42 billion, I believe, as of December 2018. Now, you've already talked about the
IFRS 9.
So what is their net loan portfolio usually like, operational-wise?
Basically, what happened was that there was a deliberate expansion during the year to grow business in Africa. Right. That's why it's thought about the professional recruitment, the increase, and other costs associated with that. But what has happened is that, remember, we talked about IFRS 9 in this program, and IFRS 9, impacted the impairment charge, loan loss, credit loss charge, increased by 82% during the year. So that's major. But the issue is that remember, it's one-off. It's the first time they implemented it, and that affected their loan loss provision. So overall, they have been, the credit policy is sound. Risk management processes is very robust, and that has been what has been driving their business. Okay, very good. Now let's talk about trade in Africa in general. How is it faring, and what role has AFREXIM been able to partake in this? AFREXIM Bank has been very instrumental to the expansion of growth in Africa, especially with what I've been doing, financing trade in Africa. And there have been a couple of initiatives they have implemented. During the year, for the first time, they held what we call in 2018, they had the first inter-African trade fair in Egypt, where a lot of African companies came there to display their goods and meet potential trading partners. Also, in 2018 also, they extended trade facilitation programs to African banks just to help trade in Africa. The push for Africa is like Africa feeding Africa, Africa providing with Africa. Because look at it, Africa is 1.3 billion naira, 1.3 billion people in population. About 55 countries in Africa. Now, about $4 trillion in consumption spending and business spending in the whole Africa. So Africa is a core market they looked at. And that's why AFREXIM Bank has been instrumental, has been one of the major push for the Continental Free Trade Area Agreement that all African countries have been pushing. You may know that the 22 countries now have ratified it out of the 55. So very soon it's going to operation. That will help in promoting trade in Africa. And AFREXIM Bank has been instrumental in pushing all this happening. Very good. And just like you said, Africa is a big marketplace, and you have a scenario where the bank has its work cut out for itself. Now, in such a situation, what challenges usually the AFREXIM has to face in this? Remember the issues, those invisible walls that we still have in Africa. Alajangote, the richest man in Africa, was saying the other day that he has an African passport, yet when he was going to Angola, he needed a visa to go into Angola. So you still have those invisible walls. Now, there's a difference between vocalizing, saying things, and implementing it. And that's basically one major issue. The Continental Free Trade Area Agreement, once it's implemented, we help trade in Africa, which is one of the core mandates of AFREXIM Bank. Do we have the political will to actually implement that? Well, the problem now for Africa is that Nigeria, which is the largest trading country in Africa, has not signed on to this agreement. It wasn't even physically present at the ceremony then. But we are hoping. The other day, the president of Rwanda said that they were hoping that Nigeria will come on board. But be that as it may, the journey has to start. That's why, with Gambia signing on now at the 22nd country, this agreement will come into play. And we believe that if maybe Nigeria starts seeing the good sides of the agreement, we'll jump into the boat. Indeed. Hopefully more countries will key into this laudable objective. Chika Mbonu, many thanks for your thoughts on AFREXIM's fortunes. Good to have you. Thank you.